subscribe to Mac Studios on YouTube. Enjoy the show. Hello, everybody. Welcome. Today we have Professor Ueng, Professor of Finance and Chair of the Department of Economics and Finance at the Cameron School of Business at the University of St. Thomas. Dr. Ueng also holds a Chartered Financial Analyst designation and currently serves at the Board of Directors for the CFA Houston Society. Welcome, Dr. Ueng. Thank you so much for coming on.
Hey, guys. Thank you for having me.
Today we're going to be talking about quite a few things. We're going to start it off with a, kind of talking about what's been going on with the stock market. It happened a few weeks ago, but the effects are still being felt today. There are a bunch of headlines still talking about what happened between GameStop and the stock market. So, do you want to explain that for us a little bit? Just kind of tell us what it's all about. How did it happen? Where does that lead us?
Sure. Eric, you sounded like you want to become rich overnight. Let me buy some games.
Everybody can dream.
It's a little bit complicated, kind of like soap opera, but simply put, right? It's basically the individual retail investors fighting against the Wall Street, the giants, like, the hedge funds or private equity, like that. Mm-hmm. In the beginning, right, people believe that those are just tiny little kids fighting against, the Wall Street giants. They're not going to win the battle. But of course, we all saw the results. So that's really the first time in the stock market history that we see the interesting event like that. So I'm glad you followed that.
Yeah. And see, the reason I think it stuck so much with me, and I think it stuck so much with other people, was just because the whole thing just started with like this thread on Reddit. Like nobody really, correct me if I'm wrong, but nobody really seemed to want to make money out of this. It was just for the whole point of, getting back at Wall Street. That was all it was really for, and of course people ended up making money out of it, but that wasn't the intention. It really just was, take on Wall Street for the first. It was very much like a David and Goliath kind of story.
Yeah, true. We have never seen anything like that before, so now whether we're going to see that in the future, that remains seen, but it's absolutely interesting. But of course, bear in mind, that's really not the typical kind of the investment strategies or game plans that we've been talking about, right?
Right.
Because when you invest, you do the study, you do the analysis, you you don't do the short term buying selling analysis, like that.
Right. No, yeah, and I totally agree with what you're saying. It's not. It's very atypical. Like people don't do this. This isn't the way that you usually do stocks.
But it sounds really exciting, right?
Right. It's very, and I like the way that you phrased it earlier, very much like a soap opera. Because again, it really did seem like it was just like the little guys taking on the big guys. But where do you see like this? How do you see the stock market like preventing this from happening again?
I think regulations will be the key. Because like I said, it has never happened, something like that before. So now the regulations, will kick in. I think we briefly talked about this. What makes this country great is that every time when we experience a big problem, for example, 2008, 2009, the financial crisis, the new regulations kicked in, and that was, how to come up with the mechanism that prevents something like that from happening again. So for this GameStop or AMC, this episode, the event, I think the new regulations will kick in and making sure the market is efficient and making sure that market cannot be manipulated by a small group of investors or even institutional investors.
Would you say that in a very general sense, this was probably a good thing for people who are trading stocks for the first, because people who maybe never participated in stocks at all, just saw this bandwagon of like, oh, let's take on Wall Street. And they bought their first stock in GameStop, would you say it's maybe could you see some sort of good coming out of it because people are actually participating in it now?
Absolutely. I talk to my students, I talk to my friends, and this is not a joke. I play, a friend of mine said, hey, Joe, look at what happened, the last few days. Let's just come up with each one chips in something. Hey, let's just go.
Yeah.
Well, first of all, it attracts the attention from people. I mean, that's good. Or the first time investors. That's very good. And second of all, I think people need to realize that that's not the typical kind of investment story we hear on a daily basis. Of course, thirdly, it shows that risk is definitely involved. People, you will see people making huge profit, out of a GameStop or even AMC, stocks like that. But at the same time, there were a lot of people losing huge, right, from the positions. So I think people need to realize that when you invest, the risk is always there, and you got to evaluate the risk. Whether you are willing to tolerate the risk. Now, for GameStop, the risk level was just astronomically high.
No, yeah, no, definitely. I remember when I was little, I used to go to GameStop all the time. It used to be this huge, right. But now I hardly, to me, GameStop is just like a museum of memories when I was a kid. It's definitely not the giant it was before. So yeah, definitely.
Gamers were upset. So upset.
Yeah. 100%. Yes. So why do you think it took such a big, astronomically wonderful event for people to join into stocks? Why do you think people just don't join stocks on the right? Do you think it's just because people don't know about stocks? Is that,
Yeah, I do. Yeah, that's a very good question. I do believe that on average, people tend to have this misconception about, hey, don't buy stocks. Don't invest in the stock market. You can only lose money. I think one of the major reasons is that for those people, they're not investing. I mean, for them, they are really just like trading. They try to time the market. What I mean by that, they try to buy low, they try to sell high. I buy it at $10, I sell it at $50. So I buy low, I sell high, I make $40 as profit. Cool. But what if you end up buying high and selling low, in the short run?
Right.
So instead, a different strategy would be the long-term investing strategy. You buy and you hold. Again, not saying just like couch potato approach, don't
right.
take care of your portfolio. But basically, do not try to time the market. Oh, tomorrow it's going to drop 5%. Oh, next week it's going to go up 30%. Mm-hmm. In theory, it's all random because it is the unexpected that affect the stock prices. It is not expected. It's not the things that we already know. Oh, it's a great company. Well, everybody knows that. So stock prices reflect that already. So that's why a lot of people losing money in the stock market and they got scared. They got discouraged. They believe that, we can only lose money. Mm-hmm. It's not for me. It's not a game. It's really a healthy way to accumulate your wealth.
Right.
Unfortunately, so I think I'm glad you brought it up. I think it really needs a lot of education, mm-hmm. For average people to understand that stock market is not as risky mm-hmm. as what they think. It's not as speculative as what they think. Stock mm-hmm. market is actually a very healthy way to accumulate wealth in the long run.
Mm-hmm. Right. So what do you think would be the right measures to take to start teaching people about, just the economy in general? Because I think you brought up an excellent point. It's not just the people that never even have joined the stock market, but it's also people that, maybe joined it, but they didn't really know exactly what was going on, what they were doing, that they got discouraged and just never went back to it. So how do you think we can fix that?
I think people really, not just because I'm a finance professor, so I'm advocating it, but I think people really should start learning this kind of things or concepts, starting at least from, I want to say high school, but maybe middle school.
Right.
I was invited to go to an elementary school, by elementary school to talk to those 7, 8 years old, 9 years old kids about mm-hmm. Investment concepts. And so, I hope it will help them as they grow up. I hope they'll have a solid understanding. We started offering personal finance, last year, and it's a great finance course for everyone. It's and our dean, Dr. Ensler, one of the best, the gurus. He's teaching this course, so I think that's one of the solutions: education.
No, yeah, and I think you're so right, because it's not only stocks; it's about like just financial literacy in general. Like I can't tell you how many people my age, I'm 21 now, they don't really know much about taxes. They don't know where their money's going. I remember when I had my first job, and I think most people who had their first job like know the pain of like opening your first ever paycheck and seeing that like a good chunk of it isn't actually yours, right? Like it's like, well, where did my money go? But they don't know about these kinds of things. So I think it's an excellent point.
Yeah, even like when if you have extra money to invest for your future, whatever it might be, maybe your tuition for your Ph.D. program, maybe your first home down payment, whatever, maybe retirement, right? Now, should you go with the 401k first? Should you go with the IRA, or not? If it's IRA, should it be Roth IRA or traditional IRA? What are the tax implications? Blah blah blah. It's important, but people just don't realize how important it is. I think education is the key.
Right. No, yeah. And even like somebody my age, most people my age, we don't really understand how to even decipher when the economy is doing well, or like when is it worth investing or not. Like, we can see the stock market doing excellent, but that doesn't necessarily mean that we're doing, well personally. So how can we learn to decipher that?
Yeah. Okay. That's a great question. First of all, the stock market is a leading indicator. It doesn't reflect what is going on now. It reflects what should happen in the future. So it's a leading indicator. So if the market believes, but by the way, it's roughly 9 to 12 months, in the future. So if the market believes that the economy is going to do well in 9 months or 12 later on, the leading indicator or the stock market will reflect that right now. So that's one way to explain why there's a kind of, how to reconcile the two. While economy is okay, on the way to recover, but market is like going through the roof. The monetary policy, like, interest rate, shorter term interest rates are basically zero. So that's very, very friendly for investors, for homeowners, for, businesses. So that stimulates the economy. And then in terms of fiscal policy, we have a lot of stimulus packages going on right now. have you received your check yet? Or even house?
Oh, no, still waiting.
Yeah. So I'm saying based upon those three major factors, the monetary policy, i.e., zero shorter-term interest rates, and the second one, fiscal policy, i.e., all the stimulus packages going on right now, and thirdly, the vaccine now becomes available now, and the expectation is that, hey, everyone gets that by the end of May, and the economy can be fully reopened, right? So by September, December, think about it, right? When that happens, the gaming industry, right? The sports events, the theater, right? The airline industries, the hotel, think about that, right? And also think about the pent up demand, the demand that currently is not there because of pandemic, right? People delay their big purchase of, like cars or some other big ticket items. But once the economy gets back to normal, boom, it's going to explode. So the market basically reflects that.
Well, and thank you for teaching. I didn't know any of that, so thank you. And you kind of touched on this a little bit. How do you see like the economy going up, like at least for the rest of this year? Because like, yes, vaccines are being distributed, and the president said that by May, 2 months earlier. Now he's saying that everybody should have vaccines, but we know that it probably wouldn't be like from one day to another. Everybody's like booking cruises and stuff. It'll probably be gradual. So
gradual process, correct? Right. Yeah, but the way we see it, even including our CFA seminars and presentations, the last several meetings, I can share this with you. A lot of my peers or my colleagues, CFA colleagues, they are very optimistic in terms of the recovery strength and in terms of the stock market momentum. So from this point on, I'm not saying we are not going to have any, risks ahead of us. So I would say the economy is going to move pretty well between now and end of December. And that's for the economy. And now for the stock market or the equity markets, I think it would do even better. Okay, I'm not here to stocks. So, I'm simply saying, that's the beauty of finance, right? We look at statistics, we look at data, right? And we come up with some, sensible conclusions. So I think 2021 will be way better than 2020.
So to wrap up here, I think the biggest point we've talked about is, the idea of financial literacy. So would you say that financial literacy isn't just a necessity, but it's something that's moral? Like it's moral because without financial literacy, you're, excluding people from the ability of financially bettering themselves.
Absolutely. I think, if we keep talking about social justice, and we're talking about, social fairness, everything, everyone should be able to access, those finance, let's say courses or finance, knowledge. But currently, it's like the vaccine, only like 10, 20%.
Right.
Getting that, right? Now, once we get to 70%, herd immunity, I use that for example, hey, our society can become much better. Our, financial markets can become much more efficient because the resources will be directed to the most productive sectors or companies. But currently, it is really not the case because people do not realize that. But let me give you one example here. Let's say if you just save $100 a month for 30 years, right? So $100 a month for 30 years. So you might think, oh, that's not a whole lot, that's just like $100, But if you invest those $100 monthly in a well-diversified mutual fund, let's say, or a stock that giving you 10 to 12% rate of return, then $100 for 30 years will accumulate to roughly $350,000. I mean, think about it. Only $100 a month. It's going to give you roughly $350,000.
Wow.
And if you triple that, you're talking about $1 million.
Wow.
But people do not know about that. So that's why they say, oh, it's okay. I'm going to buy that car. The monthly payment is only $700. Think again now, right? If you know the power of $100 per month, then,
Yeah.
So like I said, knowledge is power, especially for
finance. Right. And I loved how you had mentioned earlier how, it's not even an issue of just like economics at this point. It's just an issue of like social justice, you're, it's very much a moral issue because nobody governments, politicians, like even from both sides of the aisle, nobody denies that there's, a wage inequality in this nation. Like it's very obvious, so just in general, where do we go from here? What do you think should be the next steps we take?
Yeah, I think it has been the issue, right? This income inequality, right, between the poor and the rich. And I think given what is going on right now, that problem actually is compounded because now the market gets higher and higher. So the rich get richer and richer. And now the poor struggling to, to make ends meet, struggling to put food on the table, to send kids to the school, right? So again, policymakers have to focus on that and making sure that, well, first of all, we talk about education, we got to make it as a mandate. We're going to make it as like everyone needs to know. If you spend $700 monthly to buy a car, you need to know in 10 years, in 20 years, if instead you invest, those $700 payments, what will be the end result? So everybody should know, hey, when you use credit card, right? If you don't pay off, the credit card debt can snowball like to a point where I can't deal with it, right? So I think policymakers really need to make it available to everyone. Investing in the equity market and also investing in the housing market, like home ownership. That's in my opinion, everyone really should be provided the opportunity to participate, to become the homeowner if their income level allows that. So when the market recovers, when the in terms of housing market and the stock market, everyone can benefit. So we can kind of make sure that everyone is better off and everyone participates in the recovery.
Well, Dr. Ueng, thank you so much. This has been a very, very informative, a great talk. Thank you so much for joining us.
My pleasure to be here.